This is Total Growth Investing, where price growth is not enough. Dividend growth is not enough. We want to identify stocks, funds, and other investments that perform well in both of these measurements. Because when we find them and buy them, we can beat the market over the long term. I again need to put this disclaimer out. As I have said and put into text in my videos before, I am not a financial advisor. I am posting this video for entertainment and educational purposes, and the opinions expressed are my own. I do have a long position in Kinsale, but I'm not monetized on this channel in any way, shape, or form, and I have no business relationship with any of the companies mentioned. Right now, the number 2 stock on my TGI ranked watch list is Kinsale Capital Group, KNSL. This is a specialty insurance company dedicated to the excess and surplus underwriting market. Excess and surplus is a type of insurance coverage for risks that are normally too high for many insurance companies. In most cases, the standard insurance products are overseen by a Department of Insurance, and the types of coverage available depends on those state regulations. Each state has a guarantee fund available to provide coverage in case an insurance company goes bust. But those only cover insurance companies that are registered within that particular state. And surplus lines are most often offered by national companies, again, not based in the particular state where the business being insured is based. Similar to how the FDIC protects account holders when a bank fails, the guarantee fund system protects policyholders when an insurance company fails. If you need something beyond the standard or if the risks are too high, then out-of-state excess and surplus insurance companies, also known as non-admitted, step in to take the greater risk. The premiums for this type of insurance are higher because the risks are greater. Non-admitted carriers don't have access to the state guarantee funds, raising the risk in case those carriers collapse. However, surplus lines carriers know this, and they focus on maintaining their ratings as high as possible. In fact, many of the surplus lines carriers are higher rated than the standard insurance carriers. While reading the annual reports and hunting for information about excess and surplus insurance, I learned quite a bit. What kinds of things are covered by surplus lines? Kinsale breaks down their insurance products into 3 categories and multiple subcategories. Flipping through the pages makes you wonder if there's anything they don't cover. And at the same time, it makes you wonder what regular insurance companies actually do cover. Anyway, let's look at the size of the market. This chart shows a breakdown of the total property and casualty insurance market, how much the surplus lines are, and then specifically how large Kinsale is. The blue line shows direct premiums written, which is the money that is paid in premiums for all property and casualty insurance. This went from $221 billion in 1988 to $728 billion in 2020. The red line shows the surplus lines portion of that market, growing from $6.2 billion in 1988 to $66.1 billion in 2020. The green line is Kinsale's premiums paid, growing from $158 million in 2014 to $552 million in 2020. Kinsale brought in $761 million in 2021, a 37% increase. Since 2014, Kinsale has seen their premiums paid rise with a 25.86 compound annual growth rate. Here's a version of that chart taking out the industry totals and just focusing on some of the competition in the market. I could spend weeks gathering data for this, but I think showing Kinsale alongside Axis Capital, Allegheny, and Fairfax is sufficient to show the trends. The linear scale makes it a bit difficult to see the trends, so let's switch this to a log scale. You can see that Kinsale has been growing well over the past 7 years, and you can see how much they have yet to grow. The overall industry is growing like crazy. I wanted to highlight some historical events. CEO Michael Keogh left James River Group and founded Kinsale in 2009. On February 5th, 2010, they acquired American Healthcare Insurance Company. This was an Arkansas-based excess and surplus lines insurance company. On August 21st of 2013, they established Aspera Insurance Services as an E&S insurance broker. Based in Virginia, they are licensed in multiple states. In 2016, Aspera introduced a commercial casualty product to provide insurance services for construction, owners, landlords, and tenants, liability, and excess casualty risks in Florida. Originally registered in Bermuda, the corporation in 2014 redomesticated to Delaware. And then on August 2nd of 2016, Kinsale completed their initial public offering of 7,590,000 shares of common stock at a price to the public of $16 per share, going onto the NASDAQ market. On December 3rd of 2018, they incorporated Kinsale Real Estate and 2001 Maywill LLC to acquire and hold real estate. On January 3rd of 2022, they transferred their listing of common stock from the NASDAQ to the New York Stock Exchange. Now let's look at what brought this stock to the top of my ranking list. Their current dividend yield is very small, averaging 0.31% over the last 4 years. While this is not part of my TGI ranking system, it is something that I watch for healthy income. KNSL ranks at 216 on my healthy income list, so it's one I'd likely hold on to, but if you're retired and looking for that 4% return, it would not be a buy right now. However, if you're looking for at least 5 years of dividend growth, KNSL is certainly one you could look at. After launching their dividends in 2016, it has grown from 10 cents to 44 cents, giving a 54.49% compound annual growth rate just on the dividend since 2016. The cash dividend payout ratio right now is 2.5%, giving them a lot of room to grow in the future. And going by actual dividends paid, they have paid out steadily every quarter, raising their dividend like clockwork every year. KNSL does not have a full 10 years of history in the markets, having only launched their IPO in 2016. But if they can continue the growth that we've seen over the last 5 years, I'm willing to put my capital into a potential 10x stock. This video was a bit shorter than normal. I've spent the last few weeks hunting around for information, and about the only thing that I could have done is to continue gathering data on competitors. This is just a fast-growing company in a niche industry with a lot of potential growth ahead of them. Please let me know what you think about Kinsale. Thanks for watching. If you liked this video, please hit the like button and subscribe to the channel. I update my ranking scores a bit every day, and I run the numbers to find the top 10 after each video that I record. Here's the latest update. Kinsale stayed at number 3, and the next stock that I need to research is Thermo Fisher Scientific, TMO. Time to learn about this company, so I can present that in my next video. I'll be doing that research over the next few weeks. Along with this YouTube channel, please also like the Facebook page. And if you'd like to talk about the TGI ranking system and the stocks at the top, please feel free to join the Facebook group. I do these videos for fun, not profit. The profit comes from making good choices in investing and watching the returns roll in. Let's beat the market.